You're paying a tax you never agreed to. There's a tax you pay every single day, without filing anything, without seeing a bill, and without even realizing it's happening. And it's making you poorer, quietly. Not all at once, not in a dramatic way, but slowly, like a leak in your wallet that never gets fixed. And the worst part is this: most people blame themselves for it. They think they're bad with money, bad at saving, bad at budgeting. But what if the real problem isn't you? What if the system is quietly taking a cut every single day, no matter how hard you work? Today, I'm going to reveal what that invisible tax really is, how it works, who benefits, and what smart people do to protect themselves. Stay to the end, because once you see this clearly, you'll start making money decisions like a totally different person. Let's start with the simplest truth. The invisible tax is inflation. Inflation is when prices rise over time, but your money doesn't rise with it. It sounds normal, even harmless. People say things just cost more now, but that sentence hides the real danger. Because inflation doesn't just make stuff expensive, it makes your savings weaker. It makes your paycheck worth less. It makes your future harder to afford. And it does all of this quietly, without sending you a bill. Think about it like this. If you saved $100 a few years ago, it bought more groceries than it buys today. It bought more gas, more fast food, more everything. So even though the number is still 100, the power of it has been reduced. That's the tax. It's a tax on your time because you worked for money that now buys less. Now, here's where it gets emotional. Inflation hurts the most when you're trying to do the right thing, when you're saving, when you're building an emergency fund, when you're staying out of trouble. Because the person who spends money fast doesn't feel inflation the same way the saver does. Savers feel it like a slow punishment. It's like training for years, then finding out the finish line just moved farther away. Now let's talk about why this tax even exists. In simple terms, inflation often rises when more money is created faster than real value is. That can happen when supply chains break, when demand spikes, or when governments spend more than they earn. And instead of cutting spending, raising taxes, or making tough choices, the system often chooses the easy path: create more money. But when more money chases the same amount of goods, prices rise, and your purchasing power drops. That's why inflation feels like the world is getting more expensive, because in many ways it is. It's almost like the menu prices are going up, but your wallet didn't get the update. Now, here's the part most people miss. Inflation doesn't hit everyone equally. Rich people don't feel it the same way. Why? Because wealthy people own assets, stocks, real estate, businesses, things that can rise in value with inflation. Meanwhile, everyday people hold cash, they hold paychecks, they hold savings accounts that barely grow. So inflation acts like a wealth transfer from people who work for money to people who own the things money buys. Let's connect this to the real world. When inflation rises, the cost of living rises fast. Rent goes up. Food goes up. Insurance goes up. And suddenly, you're spending more just to stay in the same place. That creates stress. And stress creates bad decisions. People take on more debt. They swipe credit cards. They borrow money just to breathe. And now the system hits them twice. Inflation raises prices. Then interest charges them for trying to survive. That's the trap. That's why it feels like some people can't get ahead no matter what they do. But inflation is only one invisible tax. There's another one hiding right next to it. Currency weakening. When a currency loses strength, imports get more expensive, energy costs rise, and global buying power drops. It doesn't matter if you never travel, you still feel it because the world is connected. A weaker currency can quietly raise costs inside your own country, and most people never realize what caused it. They just feel the pressure and assume that's normal life now. So, what can you do about this? First, understand that saving money is good, but parking it in places that don't grow can be risky long term. Second, build skills that increase your income, because income is your best protection against rising costs. Third, avoid high-interest debt, because it grows faster than most people can run. Fourth, invest when you can, even small amounts, because ownership is one of the only ways to fight inflation. And fifth, keep an emergency buffer, because when the economy gets shaky, cash gives you options. Even if inflation tries to punish it over time, here's the real takeaway. Inflation isn't just prices going up, it's a silent tax on your life, your time, and your future. And once you see it, you stop blaming yourself for struggling in a system that quietly changes the rules. You start planning smarter. You start protecting your money. And you start building wealth like someone who understands the game. If you want more money truth, financial history, and wealth lessons in simple language, subscribe to Cashfree World and hit like so this reaches more people who need it. And comment below what price increase shocked you the most this year: food, rent, or gas?